Hey traders, Raghee here, and in this recap video for Simpler Futures, we're going to go over a number of positions that I am and have placed. One of them is a trade that I did, flew up to New York and did for Real Vision. I want to share that with you because it is related to the whole trade war narrative. We'll talk about crude and also the Russell, which are trades that we took just yesterday, and I want to emphasize the importance of having that bullish bias because that's been a big part of why we've been looking to the long side, really only exclusively in a number of markets. All right, let's talk about the FXI here, because one thing to remember that it's not just the US markets that are selling off with the trade tariffs, the trade wars kind of hanging overhead. We've seen a 25% sell-off in the Shanghai Composite. You can see Chinese large caps are really much weaker than the counterpart here in the US. When I look at the US, basically the blue chips, large caps. So you'll see that the Chinese stocks are heading lower at a quicker clip than what's going on here in the US. Now I mention that because I think it's easy to be a trader in the US or focus on US markets and forget that the ramification for the trade war is far wider than just what's happening here in the US stock market. We can see the Australian dollar's been weak. We can see that the New Zealand dollar's been weak. So the effect is far and wide across multiple asset classes. Now, I do think there's a certain timing to when these trade wars are going to start to subside. There's two things that are going to happen. If these trade wars, just the tariffs keep going back and forth like a volleyball game, at some point traders and investors will grow weary. They'll get used to the narrative and it just won't have the impact that it's had in the past. The numbers will probably fall. We've seen probably the biggest acceleration of the tariffs that the U.S. has put on China. We're expecting the retaliatory tariffs in an equal amount coming back. But, you know, what happens from here could be just a slower pace and lower numbers. And the market's just going to develop thick skin. That's what the market does. Once we've discounted something, we tend to over-discount something. And then the narrative just has less impact. And I think today was a perfect example of sell the rumor, buy the news. It's just a slightly different take on buy the rumor, sell the news. In other words, we factor in what we know and we kind of take it to the nth degree. And then when what we get is not anywhere near as bad as what we feared, the market just basically goes on in the direction that it was going in. And this is where I've had the bullish bias. This is where I've emphasized time and time again, especially when it comes to tech and small caps, respect the trend that was, respect the move that we've seen already and what preceded the chop. We're going to have a bias towards buying oversold Russell, oversold NAS, and that's exactly what we did. In fact, it's the same thing that we did in crude. So just yesterday, and these are alerts that go out to the members, just yesterday we bought crude oil twice, once on the initial sell-off after the EIA numbers, and again at a lower number, again getting in long, and we took a very nice ride up to nearly the doorstep of 74 here. And I consider that even with the OPEC production ramp up, reduction of the production cuts, which is really just an increase, right? I'm expecting, despite that, with possibly South Korea and the U.S. Now not going to buy crude from Iran, it really becomes a supply story. Even though Iran is good for about 1.5 million barrels per day, about 1 million of that may not find a home in South Korea or the U.S. And that then becomes really a lack of supply. Even though that sounds silly, it really is kind of lack of a supply issue. Another thing that I'm going to continue to encourage is traders to look at small cap energy and small cap in terms of the Russell. And this is by far the one market that I feel can be the most resilient with a overall strong dollar, although the dollar's been pulling back, but an overall strong dollar and sort of the resiliency you'll see in domestic small caps, where while the trade tariffs are going back and forth, you know, you can take shelter in companies that are not going to be hit as hard with the strong dollar and not hit as hard with the trade tariffs. So with that being said, these are where crude oil and Russell, where we've focused most of our attention. They continue to deliver really good 1-2 punch today to end out the week, and then we'll look to do it all over again next week. A couple things that I'm going to look at in the premium video. The 30-year is at a very interesting level, as are a number of ETFs that are associated with our futures contracts. And then we're going to take a look also at the euro. The euro and the dollar and gold, and what that trio could mean going into not just the latter half of this month, but into the latter half of this year. And the first thing that's going to trigger maybe euro strength and gold strength and an eventual rollover to the downside in the dollar, a dollar who's been benefiting from the trade war, is what could happen if we get that rollover, and what it's going to look like on the euro US, gold, and the greenback. It's been a great trading week, terrific way to end the week with big moves for us in crude and Russell. I'll see you next week.